Welcome back to another video. Today we are covering ICT's concept of power of three. Now today we're going to go over what the power of three is, how to spot the power of three, and how to utilize the power of three in a slightly different way than I think most people are doing. So the first thing you have to understand is what the power of three is. And it's not necessarily a difficult concept to grasp, but when you really want to dive into the power of three, you can get really in depth when aligning time and price. We're not going to quite do that in this video. That's going to be more in Judas swing videos, as well as daily and weekly analysis videos, which will come out at some point here in the future. But for now, we're going to work on identifying the power of three. So the first thing you have to understand here is what the power of three is and what those three powers are. And that is accumulation, manipulation, and distribution. Those are the three powers we're going to be discussing today. And this is what price is always doing. It's doing one of these three things, as well as rebalancing imbalances and running through and to liquidity, but that's a whole nother video. Today we're talking about accumulation, manipulation, and distribution in the form of power of three. So what does that actually look like? Well, most of the time it's going to look something like this. And this might not mean a lot to you yet, so let's add a little bit of makeup here. This is our accumulation phase. Lots of you might consider it a consolidation, but essentially what's happening here is price is moving in a sideways area that can be in a channel, ascending or descending, but for the sake of the video and the ease of the video and argument's sake, we're going to use this nice box here, and later we're going to show you a trade that I actually took using this exact concept. So this is our accumulation phase, and now we're looking for the manipulation phase, which is this fake move up. This is what we would consider a Judas swing, and then you have your expansion move down. So smart money is accumulating positions, short positions in here, and then they're accumulating as much as they can on the manipulation up. They're going to fake price up, and they're going to start accumulating short positions up here even more so they can distribute them all the way down. Now, why does this work? Well, essentially what happens is when you're in a consolidation or a range-bound environment like this, you build up lots of liquidity on either side of this range. And what is that? That's buy stops and sell stops on both sides, for breakout traders and support and resistance traders or supply and demand traders. And that's not to say they can't be nimble enough and catch this as well, but generally that's what happens, and price manipulates above one to trigger in the long traders and stop out the short traders, and then ultimately stop out the long traders and fake out all of the short traders that were correct in direction but were a little bit too early. Now what I like to do is I actually like to look for higher time frame PD arrays for price to manipulate into. I haven't heard a lot of people talk about that. Most of them like to wait until we start to really push down and come back into this consolidation zone, but I'm not a fan of that personally. If it works for you, awesome, don't change it. But for me, I like to look for positions up top here so I can catch more of that expansion or distribution move down. So now that you understand what this looks like in context, let's take a look at what it looks like in real time on a real chart. Okay, so taking a look at price here, as you can see, from about 11:30 to about 1:10, and that's actually an important time, and we'll come back to that later. This looks pretty range bound and consolidationary, and that's what we would consider our accumulation phase. This is where price is accumulating. Right, why do we want to be trading in this when we can catch things like this? There's no reason to be trading in here. Be patient, wait for the fake out or the manipulation move, and take advantage of the opposite direction move, distribution, or expansion, however you want to think about it. That's what we're here to trade, because that's the most fun. Now, getting into that concept, we understand that this is accumulation here, and there's stop losses and buy stops on the top here, and stop losses and sell stops at the lows here, at these relative equal lows, I would mention. So what we're going to do is we're going to look for PD arrays on both sides. Now we can see we have this 5-minute fair value gap here, and there's not a whole lot down low. We do have this fair value gap here for price to manipulate into, which is nice. And we also have this low here, which is going to act as a liquidity pool. But I actually ended up going into the higher time frames here, and this is what I suggest you do as well. And I was looking at this 15-minute fair value gap here, in between this blue line here and this one here is our fair value gap. And we also have this inverse BPR. I haven't covered BPRs yet, and we'll get to that. But if you understand BPRs, you know that that's a key level or an important area for us to keep in mind. So now that we have these levels marked out here, We're going back on the 5 minute and we're waiting for price to manipulate in one direction. And there it goes. So this was actually a news-driven event, I believe, but that's perfect for manipulation candles. And as you can see, we push up all the way into this 15-minute fair value gap and this 15-minute inverse BPR, which tells me that we have the opportunity to be going lower here. So I'm classifying this as a likely manipulation candle or manipulation move. So what I actually did is I dropped down here to the lower time frame. And most people are going to want to see this reverse before they get in. I was looking on the 1 minute here, and what I started to see was some more accumulation. Okay, so this is looking like accumulation to me, where price is in a range-bound environment. Like I said, it doesn't necessarily need to be in the form of a box. It can be in the form of a channel, or in this case, a bull flag. This is what lots of traders were probably looking at here. Off this big impulse move up, they're looking for price to continue higher without recognizing that we're inside a fair value gap and a BPR here. So what I did is I waited for price to manipulate. And this is actually, I went ahead of myself here. This is the manipulation candle right here. We manipulated up and then started our distribution cycle down. And what that tells me is we potentially have an order block right here. So I personally wanted to see a fair value gap form here to confirm this order block, and we didn't quite get that, but we did have a rejection off this fair value or off this order block here. So I was actually willing to go short, and I went in short at the end, right as this candle closed, with a tight stop loss above this manipulation candle. If I'm correct in this being the manipulation candle, there's no reason for price to go above it. So that's a pretty safe stop loss, even though it's real tight. And your first target should be the lows. Now this is also lunch low, so there's lots of liquidity down here in the form of relative equal lows, and it's also our consolidation low. So this is your first primary target here, and I'm also looking for price to go down here. So what do we end up getting here? We get a nice little sell-off here, and now we can really confirm that this was our manipulation leg up here, and we're likely to enter into our distribution leg, which should bring us down to here. Now, by the time this was all occurring here, I also went back onto the 15-minute, or the 5-minute here, and I was looking at this manipulation leg, anticipating where price was likely to reach to. So I took the low of this candle here, from the swing low to the top of the manipulation candle, and I did one standard deviation, which brought me down to here, 15,488.75. So in doing so, I was looking left, and I could see that we had this form of sell side liquidity here in the form of relative equal lows. These lows are relatively equal, and there's lots of sell side liquidity down here because of it. And that does happen to be right above this -1 standard deviation or swing projection. So I actually decided to take my final profit off here, and I was scaling throughout this entire expansion move down or distribution move down to keep the terminology the same all the way through the video. This distribution leg is where I am distributing my positions. It's not called distribution leg for you to hold all the way through. Okay, you should be distributing, in my opinion. You should be taking partials on the way down, especially when you have such a crazy risk to reward like this trade did here. So, as we start to, after we manipulated higher and started our expansion down, I'm taking profits. We take out the low of this box, so now I've taken profits off there as well. We end up chopping around here a little bit. There's your little manipulation leg again. And more consolidation before we ultimately end up flushing down towards this low here. And then ultimately this low here and our -1 standard deviation. So you were able to capitalize on this entire move here by simply using accumulation, manipulation, and distribution theory with a fair value gap, an inverse fair value gap or BPR, and in my case for the entry, a 1-minute order block. That's all you had to do was be patient. Okay, wait for this consolidation. There's the move up, and let's just note that the move started at 110. This is your Judas swing. 110 hits, that's your Judas swing. It's picture perfect before we start to fail to make higher highs here, manipulate above the flag breakout, tap into the order block, and slough off all the way down to our -1 standard deviation. Now this doesn't just work on the 5, the 15, the 1 minute. This is everywhere, guys. This is not just here. You can look at this on the daily, on the weekly, on the monthly time frame to start building bias and better trade opportunities for you. Now I know this was a fairly fast video, or at least I hope it was. So if you do have any questions, make sure to let me know in the comment section down below. And if there's a specific topic or video you want me to make next, make sure to let me know in the comment section down below. And don't forget to like and subscribe. Until next time.